and you there was
hashtag sponsored, I guess.
Yeah, I guess like 6,000 subscribers as lots of sponsors.
I'm a cheap day. What can I say?
But I had a member that sent me supplements actually, like a few years ago or something. He had like a supplement company, and April helped him a lot. Like he sent me like a huge package of supplements and stuff.
I had a podcast viewer message me on Instagram and sent me coffee. I don't actually drink coffee, but my wife absolutely loves it. So he sent us some coffee from his coffee subscription business, which is, according to my wife, very, very good.
Well, thank you for all the gifts. We're not waiting for more.
Just to let you guys know, it is Christmas soon, so you know.
Right waiting for more. Just some letters for the spending with me. That's getting like a little bit weaker. Anyway, let's jump into the podcast. People love the rambling. I hate it. So let's go ahead. And this, you go ahead. You tell us what it is and what's doing.
Let's jump into the deep end here, and let's talk about building links to casino websites and what we can learn from that, even if you're not a casino. So the first site is a Swedish casino website. It's called Slotsia.com. And they have a UK version, which is in English, /UK. And on there, they have a blog post about global party cities. Now, the interesting thing about this is if you look at the blog post, you would never know this was a casino site unless you kind of figure it out from the URL. They've gotten rid of all the casino branding, all the navigation, really everything that would identify this as a casino site. It just looks like a sort of nomad list style page with all the major party cities, I guess, in the world. And it's a relatively simplistic post that they've made here. What they've done is that they've picked a bunch of criteria, which they believe determines a party city. I'm not sure if I would necessarily agree with that, but it was like the cost of 2 nights accommodation, the price of a taxi, the price of a meal at McDonald's. I mean, I don't really know how that contributes to a good party city.
That's some high quality coffee.
The price of a pint, the number of casinos, the number of bars and clubs in the town, crime index, and safety score. And they've made numbers. They've gathered data on this for every city that they have in their list, which there's only 36, so it's not that many. It can't have taken that long. I know things like McDonald's data, the number of the price of a pint in the city. You get that from a bunch of other websites. That data is very easy to gather. So they pulled it all together, and they've made this nice interface where you can sort the cities. So you have best overall, or if you want to know which one has the best price for a pint, you can click on that, and it'll sort it by the cost of alcohol. And what they've done here is they've made this kind of ranking system for each city, and they've appealed to cities' newspapers or their journalists in like there's this one from Moscow Times where they have an article, St. Petersburg named world's 4th best.
Good morning, Kuno. Oh, oh, very nice. Thank you. The lights, these. Good job. Good morning, little Noel. Oh, wow. Oh, what a Christmas decoration. I have to look. Oh, very nice. Santa. Santa. Oh, say hello to Noel. Oh, Sawadee. You're gonna show you jump? You're gonna ready? 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 3, 2, 1. Wee. Oh, not today. Not today. Back to mum. Back to mum.
I go to many places.
Yes, I can tell.
I go to many places and visit Robinson has very not good things, so that I don't buy and I go to the other place. It's too expensive. I don't want to
Good job.
yes, that and I go the other place and I feel that it, how to say, the material is not good.
Looks great. Looks great.
Yes.
Thank you very much.
Hello.
Morning, Tony. How are you, man?
Doing well. How you doing?
Yeah, 7:30 a.m. and I'm like 4 hours into my day, so I'm like halfway done, and yeah, feeling good. How about you?
Awesome. Doing well. Just been working on the system this afternoon on some of the nuts and bolts stuff of actually trading it live with Interactive Brokers as an American.
Ooh. So in Australia, we have to use their, they lost their FX license in Australia, so we have to use their CFD thing. So you're using real spot FX. So that's their Ideal Pro auto matching.
Yep.
That's the one. Cool.
Yep. Um, yeah, I've never traded FX before. I've traded futures, I've traded options, and primarily I was a day trader in the prop trading world. So ironically, the thing that most people don't have any problems with are the things that I'm just getting used to, which is trading FX.
I find FX really difficult. So I have a strong preference for futures markets. Just in my opinion, futures is just a more serious professional thing, and FX is amateur hour, and that's just the way I feel about it. I'm probably wrong, but that's just the way I feel about it.
Yeah, so I was going to ask, as far as trading it goes, there's the Euro USD futures and there's the Ideal Pro, like on Interactive Brokers.
Okay, so that's an interesting thing. So I traded the Euro USD futures for a little while, just to get some data on how it was, and it was, when I traded it, it was in the markets went crazy in February, right? And our volatility regime. So in effect, the data that we have prior to February may as well be from another planet. Like 80% of trades were minimum viable. Our trades, it was a very different thing. So there wasn't enough volatility to trade it, taking the signals off the 6E back then, but there is now. So what I ended up having to do was take the signals off FX and transpose them into 6E. And the commission structure was lower, slippage was lower. There was a couple of instances, I only did like 100 trades. There was a couple of instances where it hit the target on FX, but not on futures or vice versa. So it was different. I've got a student now, Anthony, who's trading exclusively 6E, taking the signals off the 6E, and his results are very good, probably better than FX.
Okay.
But he's trading a little later than my time window. He's starting at 11 a.m. Australian time, which is what?
Like 11 a.m. here.
No, 11, no, sorry, 11
p.m.
10 or 11 p.m. Australian time is about 6 a.m. New York time, I think.
Yeah, I forgot you're in Thailand.
Yeah, I mean, well, until Corona, I traveled half the time between Thailand and half between Australia. So I use New York time because otherwise I just get confused every time I go back home. And blah, blah, blah.
Gotcha.
So bottom line, as an algo thing, I would be personally, if I was in your situation looking to run an algo, I'd be looking at 6E because futures are much more reliable market to run algos off. You don't get any of the data discrepancy bullshit that you get with FX, right? Like they retroactively change the charts and shit like that.
Sure. One thing I've been looking at, I've been using FXCM on TradingView as like the gold standard for everything.
Well, it's not the gold standard. In fact, it's objectively pretty ordinary data, but you just need something that's. I'm from a ease of use situation. TradingView is just an incredibly easy platform to use, and it's such low. Like I trade off a virtual machine because I'm using a Mac. So for me to load up my virtual machine, make sure the internet's fast enough to work, connect all my data feeds, get the shit up right. I just have my home screen being, I just have my default Chrome browser is the screen that I should be looking at, and every time I open up a new browser, I'm looking at the charts that I should be looking at. So for me, it's not relevant to an algo trader, but it's just convenient. And FXCM provides the data for Kinetic, for IQ Feed, for Saxo Bank, for a bunch of the big name FX things. So it's by far the most popular retail level data feed, which doesn't mean it's the best. In fact, the opposite, but it's the most popular.
Yeah. Yeah, that's what I've been using. I've been using the data feed through IQ Feed.
Mm-hmm.
And I've been using that on my algo to compare it against the baseline. So it's the same data. And that way I can go through trade by trade and see when there's a discrepancy and see occasionally maybe someone missed something in baseline or the algo's
Yeah,
off.
I'm not the world's most diligent guy with that. So your first thought should be, oh, Scott fucked it up. That should be your first thought.
Yeah, and for the most part, I've been working on this for about 3 months now, and it's pretty close. The only part that I've really really haven't dialed in yet is when it's in DV mode on the 2, and the rule is when it hits low volatility and then spikes, it comes out of DV mode.
Correct.
And
I'll ignore that. We pulled that rule out of the system later because it was A, subjective, and B, it happened so infrequently that it just the very small amount of instances where it made a difference, it just put it this way, my goal over time is to remove rules, not to add rules. Sure. So anytime I can make the system simpler and still get substantially the same result, that's what I'm going to be looking to do.
Okay, that's simple. Cool. Yeah. So I'm shocked.
Can you share your screen and let's work through some of the things you found from the
yeah.
And maybe we can get some. So you're in an unusual situation, right? You don't have to trade the system as I trade it because you're an algo trader. Like I would be looking very strongly at subsets of the system that have higher expectancy.
Oh, yeah. So hang on, let me figure out how to share my screen here. It's in. Scott, offhand, do you know where it is in Zoom on the Mac?
On the Mac, if you go to the bottom of the window that you can see me, there's a bunch of buttons. There's mute, stop video, security participant, share screen.
Share screen, there you go.
There we go.
So first off, I also want to thank you because, for me as a trader that I've been in the game for a long time, I've been through Van Tharp. I've been through thousands of retail trading things and under the sun. This is the first real retail trading thing I've ever found that actually works.
It's funny that, isn't it? I must have spent, fuck knows how much money buying systems as a retail trader before I met Van Tharp's guys. No one has systems that fucking work. What's the deal?
Yeah. This is shocking to me. So thank you for actually being a marketer that actually has a system that works. Yeah,
it doesn't work the other way, but actually, I think it does work the other way because all those guys with the fake systems, they seem to make much more money than me. So I guess it must work on some level. Yeah, it's weird. It's and I really like Van Tharp's approach. I got a lot out of it. I traded one of his guys' systems for a year, but their whole organization just pushed us heavily into discretionary systems, and discretionary systems are just hard.
Yeah, definitely. I think really the most solid guy out of that crew is the Forex guy out of Europe.
Gabriel.
Yeah, Gabriel. He's really solid.
He's very solid. His was the system that I traded for a year. I wasn't able to get his results, but I was able to get a pretty solid expectancy after 350 trades, and a lot of my subsequent work is based on the edge in his systems, which I algorithmatized and is subjective white man magic and turned into real systems, and his edges are real.
That's awesome. Another unicorn in the world of retail trading.
He's also a very helpful guy. He spent a lot of his time helping me out.
Cool.
Yeah.
So on my data, I don't know if you had a chance to look at it, but
I was saving it to go through with you. So let's go through it.
Okay. Let's. So I think probably the most interesting thing to start with was I looked at it in the baseline hours from 2 a.m. to 8 a.m. Eastern, and then
outside of it.
yeah, so basically it's the US session from like 8 a.m. to 16 or 1800.
Mhm.
And the system works great during the baseline hours, and it kind of sucks outside of baseline hours.
Very interesting.
So
I'm not surprised that it sucks in the Asian session. In fact, I don't know any systems that work in the Asian session.
so with the Asian session, what hours would those be?
The Asian session would be about 7 p.m. Eastern to about midnight Eastern.
Okay. That's probably the only area I really haven't done much work on yet. The way I just set up the rules is it doesn't take entries after like,
Gotcha.
I think 1800 or so.
Gotcha.
But so basically we're looking at the baseline session from 2 a.m. to 8 a.m. and then the US session from 8 a.m. to like 4 or 5 in the afternoon Eastern time.
Mhm.
And if you look at the baseline hours, you have an expectancy of, well, actually backing up, if you take both sessions together, you end up with 461 trades with an expectancy of 0.08 R.
Mhm.
And then if you take just the baseline session, it's 190 trades with a 0.19 R expectancy. And keep in mind, this is just a random section of time I picked from June till November.
Mhm. June. Well, that's the current market. That's the current market type. So there's no. The market type was clearly very different up until February. You know, we're at I think we're at decade volatility lows. Yeah, it's just a substantially different thing. So that's sound. I'd like to break this up into, subsets of confirming evidence and with and against trend, but I don't know if we're going to get enough statistically significant data.
I've got that further down.
Oh, okay. Of course, yeah.
So if you look at, so the US session, we end up with 271 trades with an expectancy of 0.
Wow.
On
Euro USD. So
yeah,
what would be interesting is to run that same thing with ES or NQ.
Yeah, I started playing around with those two, but I was getting ahead of myself. But ES looked really good during US hours.
Yes. Okay, so there's a couple of things with ES and all stock markets actually. Longs and shorts are fundamentally different. Like they have an upside bias, right?
Yep.
So you need a trend filter. And the nature of ES, where you have $12.50 ticks and $50 points, means that it's statistically much more likely that you get equal doji bars. So you either need to relax your definition of hammers and shooting stars or ignore that because they're very difficult on ES. Not so much on NQ or YM, not a big deal, but on ES, it's certainly.
Got it. So you would be much more discretionary or much more selective about taking hammers or shooting stars?
What I would probably do is I've got an alternate entry setup, which I think is better and more suitable, which I'll run through. I'll run through afterwards, or I'll make you videos on it. So I would be looking at that.
Cool.
I've got an alternate trend following entry.
Cool. Yeah, so that's kind of the difference between the US session and I guess you would call it. Yeah, it's a huge difference.
And in the drawdown, it's just the performance sucks. There's no other way to say it.
Yeah, I think there's one trade in here. They had a minus 10R that was a mistake. It was one of those things.
But it's still a 15R drawdown. It's like
yeah, it's still a 15R. Yeah. So yeah, it's a huge difference.
Really interesting. And because I know I've got people trading both ES and NQ in market hours, and they're getting excellent results. So that doesn't so there's my initial hypothesis, just without thinking about it too much, is that there's a sweet spot in volatility. Like it's a not too hot, not too cold situation that works.
Yeah.
More investigation needed.
Yeah, I think another interesting thing to look at is right around the Europe Open, like around 2 a.m. when the European markets open,
Mhm.
and looking at what happens when the U.S. markets open at 8:30, between like 8 and 9.
The first hour is most likely a negative edge on that. That could be the substantial. I keep the baseline from 2 a.m. to 8 a.m., but that's a historical thing. The first hour from 2 to 3 sucks us. Like it sucks. It's dragging the results down. But I was in a situation where I was actually trading it at that time, and through some thing of luck, I'm only trading like 2-3 days a week. I was actually making money, but there was luck in play there, and I would have looked like a complete arsehole if I just said all of a sudden, like, oh, we're not taking the data from this particular hour. I would have been called out as being curve fitting, which it would have been curve fitting, but I think it would be a good curve to fit.
Yeah, and sometimes you gotta trade those bad times to know they're bad times.
Yeah, well, when I first started trading the system, I was trading ES at the market open, which is 8 p.m. my time, and I thought it was going to be the best time, and it turned out the first hour of ES is a negative edge, and there's very, very strong time of day edges with any intraday stuff.
Yep. So yeah, now onto the trending thing. I think this is probably the easiest thing for people to like incorporate into the system because it's pretty glaring. So if we work just with the early trades, we had 190 trades total.
Mm-hmm.
And now if we look at trades when either the 5 or the 10 is trending, doesn't matter if they're trending up or down, but if one of them is trending, we end up with 177 trades with a 0.21 expectancy.
So let me get this straight. So it doesn't. So even if it's counter trend.
Correct.
Wow.
So now if we look at if both the 5 and the 10 are trending, doesn't matter if it's up or down, we end up with 120 trades.
That's totally counterintuitive. That's exactly the opposite of what you would think.
Wow.
But
there's something you said though in one of the videos that like totally made sense to me is you said the system sucks when it's just going sideways and the market's not doing anything.
This is true.
And
I get what you're saying. So when it's trending on the higher time frames, everything's in gear. It's a nice smooth thing. It's predictable. It's like it's more signal, less noise.
Yeah.
Wow.
So we go from 190 trades to 120. So we give up like 37% of the trades, but we almost double the expectancy.
And there's opportunity to further improve that by filtering out the small R value trades on top of that. That seems like.
Yeah. So now, so if we look at just when both the 5 and the 10 are trending down, that accounts for 66 of these trades, and those have an expectancy of 0.29, which is still substantially better than the baseline or the total of 0.19.
It's definitely better. Do we have a bigger data set we can run this over? So I mean,
I've got 3 years of data I can run it on. I've only picked like 3 months.
Well, you've done it the right way, because if you build your ideas out on a big data set, then you never quite know if you're curve fitting, because statistical significance is impossible to get for this, right?
Yeah.
Like, you can never have enough data to be sure, but the way to reduce the chance of you fucking yourself is to just sequester out some data, like it's the Bob Pardo idea of just take some data and throw it in your back pocket and never ever even look at it, and then run your improvements over that data and see if they hold.
Yep. And then the magic for the long RTV, RTC trades is when the 5 and the 10 are both trending. So we end up with 45 trades with an expectancy of 0.43.
Say that again. When the 5 and the 10 are both trending.
Yeah, they're both trending up. So they're both trending up.
And we're going short. Wow.
We're taking long trades.
Okay. So 5 and so 5 and the 10 are trending. Oh, so this is a trending confirming events.
Yeah. So this is long trades only. I only have long trades here.
Okay. So this is not. So let's go back one. So
okay.
This was, one is trending and one isn't.
Let's see this. So this one here, there's 120 trades, 0.35 R.
Yep.
This is the 5 and the 10, both trending, but it doesn't matter what direction.
Okay.
Just they both have to be trending.
Okay, and so as a practical matter, that if both the 5 and the 10 are trending up, that would be a long RTV, right?
Yep.
And the next one,
the 66 trades is when both the 5 and the 10 are trending down.
Okay. So that's the reverse of that. So that's relatively close to that, given, one's 0.29, one's 0.235. That's within one standard deviation, especially considering the euro's been going up since June. So you would expect a slight decrease in performance, right?
Yep.
So that seems to hold. And this is also this is what our data in the most recent iteration showed, that Bollinger trending and trending are just dramatically better improved edge, and we can go for more too. So we're going for 2R stop to break even at 1R on those trades, and that added about 35% to that.
Wow. I think these trades here, when both the 5 and the 10 are trending in the same direction as the trade, I think these are probably great candidates for shooting for 2R.
Yeah. So what we've done is actually, let me share my screen for a sec, and I'll show you.
Cool.
No. So since we implemented the going for 2R on you can see that we have, the 2R ones aren't insignificant, and there's a few here, but let's I've been running the old exit algo, and let's run it side by side. And let's just copy and paste this to a new thing. Actually, I haven't done this. I've been meaning to do it in
Take a look at the 2 columns of how they compare.
Yeah, exactly. Just doing side by side and graphing quickly. Sorry, I'm not the world's best spreadsheet guy, but
No worries.
and let's. Roughly. Oh. So they look like they've about the same so far. Let's have a look at the. Yeah, not a real significant difference.
But over 100 trades, it's probably 4R.
Yeah, and how many trades are we in? Where I mean, it only affects a small subset of trades, but yeah, over 100 trades, it's the results were pretty good. So actually, I'll send them to you later if you want to share your screen again. But
yeah,
the results were a pretty solid 35% improvement.
Nice, very nice. See, can you see my screen?
Not yet. You might have to share again.
All right.
So that's effectively trending, confirming evidence, which is the sweet spot of all of it. It's like it's far better, and the rationale behind it makes perfect sense, right? Like you've got a 2 minute going down, and you've got a 5 and a 10 minute going up. The odds are very strong that the 2 minute guys are going to be wrong, right?
Yeah, exactly. So it's like one's bottomed in reverse, the other one hasn't done that yet.
And that's actually Gabriel's edge too. That's if you strip the bullshit out of it, that's the basis of all of his systems.
Oh.
Except he looks for it going down on the 5, but up on the 8, 21, 50, and 200.
Okay. Yeah, so that's the trending stuff is, basically if I was looking at this, I think the simplest way to like dramatically improve the performance.
Just too much, 100%.
Yeah, is only take trades when both the 5 and the 10 are trending. And when they're both trending in the same direction of the trade. So if for long trades, when the 5 and the 10 are trending long, I would just shoot for 2R on the long trades.
100%. 100%. Okay, so I would also utilize a move to break even.
Yep.
I think that would definitely be worth testing. But you want to test it separately. So you want to test it 2R first, and then 2R move stop to break even at 1R. I think the next logical thing is to see if it holds across markets. If it holds across markets, then you've got more expectunity, like more opportunity. Very promising.
Yeah, and to see if it holds on the short side too. I haven't coded up the short trades yet because I was going very slow to make sure it all worked first properly. One
thing you might want to test is a trend filter. When it's a higher time frame trend filter, either like a 60 or a 4-hour or a daily chart filter. I tested against I tested against trending on the daily, and there was no difference at all. Like it was like very no significant like longs are better than shorts thing. But maybe the daily chart is just too far removed from the 2 minute chart to have any real effect at all. Maybe a smaller, maybe a filter on a higher time frame that's not so far away like the daily is. Maybe like a 60 minute or something could be worth testing as well.
Yeah, I think the 30 would be a good candidate. Just use the
I agree. It's 3 times the 10. It's 10 times the 2. it's definitely significant, but not so far above it to be gone like.
Yeah. Yeah, so I've got that to try out.
The next thing you want to do is pull out the size of the R values. I think there's significant edges there.
Oh, like for the pip, like the R size and pips.
Yeah.
I did that further down here, and it basically confirmed what you've already found out.
Small pips, less edge.
Yep. Let's see, what else did I test? So I tested when both the 5 and the 10 are in DV mode.
Mm-hmm.
So both are in negative DV mode, so they're both trending down. There's only 25 trades, 0.33 R, so they do quite well. Not tons of data there, so it's kind of inconclusive to draw solid concrete evidence from those.
Yeah, I would love to have more data on that.
Yep.
Yeah.
And then when they're both, the 5 and the 10 are trending up in DV mode, there's 30 trades and they have an expectancy of 0.48 R.
I mean, so they're both down and up are good. I mean, considering that the euro's been going up since June, which is your data set, it's good, right?
Yeah.
I mean, you have the opportunity of running multiple markets here, right?
Yeah, I think the other market I've been testing this on probably the most is the VIX futures.
Ooh, interesting market.
It's magical. Especially on.
It's what's magical on the short side, right? Like I know a bunch of algo traders that will never trade ES from the short side, but if it's a down day, they're turning their algos on VIX because it's just a
shooting fish in a barrel. It's the easiest money there is.
It's the easiest of all, and it's its own separate thing, right? Like,
yeah.
You can only play that game if you're not a complete fuckwit, and it's a market filled with participants who aren't complete fuckwits. There's just relatively more signal and relatively less noise.
Yep. And it has a downward edge to it, which makes it easy to trade from the short side. Yeah, so that's the DV mode. And then I looked at when either the 5 or the 10 is in DV mode. It doesn't matter if it's up or down, just one of them has to be in DV mode.
Mm-hmm.
That ended up with 130 trades with an expectancy of 0.25 R.
Mm-hmm.
So not nearly as solid as the edge of when the 5 or the 10 is trending in non-DV mode.
Pretty mediocre, but not terrible.
Yeah. And then last thing I looked at was the low pip trades when they're less than 3 pips and we're using 3 pips to size, but we're moving the stop up on them. So we're not using the 1 hour stop. And out of 190, there was 31 of those and they have an expectancy of 0.36 R.
So yeah, that's my experience too. Those ones were great. The 3.5 pip ones suck.
Really?
Yeah.
Yeah, I can pull those out and look at those too. And just
I think there was, to me, it seemed like there was something about that super small range was just something that almost has to break out by definition. But a medium range was like.
Like would medium be like 4 to 5, 6 R?
Medium would be 3.5 and 4.
Okay.
But you're dealing with a devil deal here because your commission, I mean, Interactive Brokers is charging you a minimum of 20 basis points. So on a 3 pip range, you're going to be paying about at least 0.15, probably closer to 0.2 R with slippage and expectancy weight. So you're fighting the tide with those ones.
Yeah. Exactly. So I figured, realistically, you probably have to take off 0.15 R.
I would say that's a reasonable expectation, but call it 0.2 to make yourself safe. Is it worth doing? Yeah, 0.16 on an algo that you don't touch with a high expectancy. Yeah, actually, that's worth doing.
It's I think it's what the name is. It's the Holy Grail. With a low drawdown, I don't know what else you can ask for something that trades, that makes, 40 or 50 trades a week, especially if you bake in multiple markets into it.
Yeah, it's a neat concept. It's what I would be looking at in your situation. I would be looking at a low-cost broker like TradeOvate, that you can get your commission structure down to nothing, and I'd be looking at futures.
Yeah, I think FX as a US citizen on Interactive Brokers, it depends on the volume you do, but the cheapest it is I think it gets down to like 75 cents per 100 lot per 100K.
Really? That's
Yeah,
cheap.
if you do volume, if I understand what they're saying correctly.
75. That'll be 75 cents in and 75 cents out.
Yeah, so $1.50 round trip.
Yeah, I'm paying $2.
Okay. And then futures, probably the cheapest thing going, I think, in the US is, keep in mind they've got to have all the data stuff, so I don't have to start from scratch on getting the algo to work with the brokerage shit. The nice thing is with Interactive Brokers, I've already got it working where I can send orders.
I mean, 80% of all the algo traders I've ever met use Interactive Brokers. It's the for algo traders, it's the one.
Yep.
Look at TradeOvate though, because they have an all-you-can-eat package where they charge you you still pay the exchange fees to the CME brokerage to CME, but they have different packages, but they have one where for $200 a month you can trade unlimited. So
seriously?
Yeah. It's an all-you-can-eat. It's a phone plan, so it's a software plan.
Is there any gimmick with it? Like
no, there's no gimmick. Some of the really big name scalpers that I follow are onto it now. So yeah, it's no scam, no gimmick. Like it's legit. Like you still pay the CME,
sure.
which is like I think it's like 80 cents a month, whatever. But yeah, it's drastically cheaper.
Okay. I'll have to check it out and see if they have an API to trade with an algo.
Yeah, I'd be looking at it. But I mean, Interactive Brokers is pretty competitive. They're not like the absolute cheapest, but they're not. They're certainly not rich. And by the way, I don't want the absolute cheapest of anything. Like, I've been with Interactive Brokers since 2007, and they've never fucked around with me even once. Like, that's worth something.
Yeah. So I'll start looking at doing the futures then instead of trading the FX on.
I think it's just a more pro level setup for you. Like you're a serious guy. Like that's the. You can have a lot more confidence in your data. Like from your point of view, I could never be 100% sure that FX data I got was stuff that I could trade off, but I can be 100% sure that the futures data is the data, right? Like there's no fucking around with it.
Yep. Gotcha. Cool.
Well, really nice to talk to you, and let's do more of this.
Yeah, likewise.
Stay in touch and we'll call whenever you need. And yeah, I'm here to support you as much as you need.
Awesome. And thanks again for being a marketer that sells something that works. But
it's actually the very least that I could do, like the very least.
The hardest part for people to fathom is, I guess probably the biggest obstacle you have is this is not something you're going to learn in 2 days. And, you're not going to master it in 2 days. So, and that's why it's probably hard to, Yeah,
it's much easier. Look, I pay a bunch of marketing guys to do my stuff now, and they're a little bit bigger on the promises than I'm comfortable with, but that's just the way it is, right?
Yeah, exactly.
Yeah. All right, Tony. Well, yeah, really nice to speak to you. And is it okay if I share this in the group? Because I'm sure the rest of them knows.
Yep.
All right, let's do that.
Cool.
Great. And speak soon.
See you. Bye.
Bye.